Okay, folks, welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and welcome. Good morning, and we are prepared for a pretty good show this morning because we're seeing a bit of a reversal in the markets, and we're going to talk about A, the futures market, B, the news that drove the market yesterday, and how I think that the markets probably, I'm not all that arrogant that I'm going to say the markets are wrong, but I think that traders got it wrong. The markets are never wrong. Traders got it wrong yesterday with the sell-off. So we'll go over some headlines, my thoughts on yesterday's price action, and then we'll go over, with a wrap-up, the futures market to see how we're closing out the show. Has there been any change, whatnot? And in the meantime, if you have any symbols, if we have a few minutes, if you could drop them in the chat box, we'll take a look at them for you. And primarily what I want to go over is this. If somebody could do me a favor, this number up here is 1,499 subscribers. If you're not a subscriber, can you please get me over 1,500 and click that bell button at the same time? Because it's driving me absolutely nuts. I'm at 1,499. So be that person, please. I go to these gamer channels sometimes, and I see them have these kids, 16 years old. They have, 1 million subscribers, and I'm at 14.99. It drives me crazy. So, if you could do that for me, I'd appreciate it. Also, thank you very much for those who have taken the survey that is listed below in the description area. It helps me to understand content that I could provide you, who my audience is. And that way I mold what I say around who my audience is. I think that makes sense. So if you could complete that survey below, I'd appreciate it. Some outstanding feedback so far. Most of it really good. Some of it constructive feedback. And I love it. Does it sting a little bit when you think you're doing so great and somebody has an opportunity for you? And sometimes it's a little bit, ouch. Yeah, it hurts. But you know what? You take it. It was constructive feedback. I'm going to take it to heart, and I'll build on it. It's all good stuff. So thank you very much for being honest and open. It helps me out. And then it helps you out if you get any value out of this program. So let's talk about the futures market first. Let's do a quick run through. So we'll begin with the U.S. dollar because this is what I've been watching primarily. Yesterday, and I went over these numbers last night on Market Wrap. On a daily basis, you saw the dollar rally on a day where it should have imploded. We had the Federal Reserve finally come out and admit officially that they have a new round of QE. They won't call it that. I don't know what they're going to call it. Call it cupcakes. It doesn't matter. What matters is that they have already been in the bond buying business, expanding out their balance sheet for 2 weeks. We've spoken about it. I've showed you the chart of their balance sheet. Now, yesterday, they finally admit that they're going to expand their balance sheet. No. Nobody called them out on this. You have been expanding your balance sheet. You've already started. But now they're saying they're going to. This is all this nuanced crap that nobody wants to talk about except for us in the not mainstream media. They're calling it not QE. I'm calling this not mainstream media, what we do here. So the dollar yesterday should have imploded. And I told members yesterday that I think that the market had it wrong. They focused way too much on the China trade talks, meaning the president said that he was positioning in advance of the trade talks that he was going to slap visa restrictions on Chinese diplomats, possibly some controls on or blacklists on some Chinese corporations. All of them had no names of who was going to get blacklisted, who was going to have visa restrictions slapped on them. It was all positioning in front of the negotiations because the Chinese slapped him in the face on Sunday night. He wasn't going to take it. So, rather than focusing in on the green light that the Federal Reserve gave to the market to go rallying, the market's focused on the headlines, which are only good for the next couple of days, maybe. The markets will forget and the stock market will move higher. Why? Because the macro view is that we have QE going out until at least 2020. That's a known. That is a known. That is a fact. We may have a deal next week. We probably won't. We may have a deal next month. We probably won't. But the macro view is of this market, although we are position traders and short-term swing traders, but we pay attention to the macro view because that provides us an outlook, an environment of where we're trading in, so we know how aggressive we should be to the long side. And what we want to be here is building a long position fairly shortly, because I think we're going to get a reversal on this market fairly shortly. When we do send out an alert, when we do send out a buy alert, it'll be going out to all of our members. Take advantage of the 14-day free trial offer. Know when we begin to build a position. Know when we begin to add to that position. And we will be beginning to build aggressively on a breakout to new all-time highs. And I'll be walking members through this process fairly shortly on the week ahead commentary. It goes out every weekend, and on Market Wrap each night, and of course in the forum. So the dollar this morning has broken down. I knew it would. I said this last night. The dollar should have broken yesterday. Now it's doing it right now. This is a 4-hour chart. These will all be 4-hour charts. So we broke out here on the 8th in the AM, the 9 o'clock bar. We closed above resistance. Then overnight, we broke down and closed down below support. The dollar is under pressure. And of all the currencies that is looking good relative to the US dollar, it's the euro. Of all currencies, the basket case, and I know I have viewers over in Europe, no offense, but Mario Draghi is the biggest basket case of them all. The euro is gaining steam relative to the US dollar. Why does this matter versus the Aussie dollar? Why does it matter versus the yen? Why does it matter versus the Canadian dollar? When you take a look at the weighting of the Dixie, the dollar-weighted basket of currencies the dollar is weighted against or traded against, the euro makes up over 50% of that basket. So, as goes the euro, in all probability, so goes the US dollar inversely. So if the euro rallies, the US dollar is probably moving down, and vice versa. So right now you're seeing the euro rally. We haven't broken out yet, but I think that we will. The euro is rallying. Good morning, J.A. Good morning, Pat. Pat, did you get my email from last night? Trent, good morning. Thanks for joining. All right, so what we're looking for here is a breakout above this upper band of resistance and a close above it. If we get that close above this resistance level here, in all probability, you're seeing a continuation breakdown on the U.S. dollar. Why does that matter? It matters because U.S. manufacturing is in contraction. We know that. That's a fact. How does that help manufacturing? Good. Good to see Matt, Pat. Thanks for the feedback. Thank you. And look, so the U.S. manufacturing is in contraction, and the U.S. dollar, I lost my thought there, sorry. The U.S. dollar, when it pulls back, it allows for our products to be cheaper overseas, and it helps our manufacturers. So expect a war on the dollar, and that war will come from within, not external, but internal, by the government. So the euro makes up the over 50% of this chart here inversely. We are breaking down versus the euro. And what else does a weaker U.S. dollar help? Look no further than what we have been long of and what we did very, very well in yesterday. And that is, we are not long of gold. We are long of the gold miners. Gold. Gold is moving up higher. We are up over 0.5% this morning. We are long of the NUGT. I wouldn't go buying it right now. I will put a note in the forum as to where I believe we can have support and if you wanted to buy the dip, because I think we're going to get a dip this morning briefly, and then we're going to proceed higher later in the week. And I think that ultimately this week or next, gold is going to break out. So I'll put a note in the forum, and I think that there's a good spot to enter long if you're not currently long, if you're looking to add on a pullback. But gold is looking good. We're seeing some topping tails here. And this is the first chart I took a look at this morning. And when I took a look at this chart, I grew a bit concerned about gold short term. Why? I saw topping tails, but I said, aha. I didn't look at the S&P futures. I didn't look at the Russell 2000 futures. I said, I bet with these topping tails here, you're seeing a bid put under the stock market futures. Sure enough, let's go back. Take a look at the S&P futures. There you have it. We're up nearly a half percentage point on the market on the S&P futures. Thank you for those likes, folks. They really help with the YouTube algorithms. Thank you very much. And please, if you're not currently a subscriber, click that subscribe button. Get me over 1,500, please. It's driving me crazy. And click that bell to get notified. Click notify all so you get notified of when we go live in the morning. Thank you very much. All right, so the S&P futures are bouncing back here. Will they close there? We don't know. Will I be buying the open? No way. I never do. That's not my style. Because what I'd be worried about right now, because we broke critical support, what I'm worried about is that we are seeing a dead cat bounce. We just shot up higher here. Really a big boost higher. Let's drill down here. Yeah, look at the breakout here. We're moving up higher as we speak. Big time move higher in the past few seconds on the S&Ps. Let's go to the Russell really quick, because I've been watching the Russell. We were higher. We are catching a bid, a big-time bid. This is unsustainable, though. Into the close, we'll get a pullback. It's 5:12 in the a.m. right now. We're going to get a pullback because at current, we're trading off of the third standard deviation Bollinger Band. We can continue higher. Expect a sideways consolidation here, but I'm betting right now that in all probability that we are going to open up higher. That's no great announcement on my side. I think that we're closing up higher today. I'm going to put my nickel down here and say that. Why is that? It's because, again, as I mentioned earlier, I think that traders had it wrong yesterday. I don't think the market had it wrong. I think that traders had it wrong. They paid attention way too much to the Chinese news headlines. They didn't appreciate the fact that it was all positioning and that you had the Federal Reserve finally admit QE is back, and now they're realizing it and they're in there buying the market. Will they close it higher on the day? I don't know. I'm not that smart, but anecdotally, internally, my gut is telling me, yeah, they are going to close this market up higher. If they do so, we'll be looking to open up a long position of the Russell. I'm looking at the biotech names, LABU. I'm looking at healthcare, CURE. You don't want the volatility of CURE, which is a healthcare leveraged ETF. Simply look at the HLV. That's not a leveraged ETF, but you get long of healthcare and you don't have the volatility. I appreciate the fact that people want to get long of ETFs, yet they don't want the volatility that I sometimes trade. And my survey taught me that. So please take that survey below. I didn't appreciate how many people like that we trade ETFs, but not as much like the leveraged ETFs. So moving forward, what I've learned is talk more about the underlying ETF rather than just the leveraged ETF. Thank you for the feedback, and please take that survey if you would. It's in the description area below. Thank you very much. Good morning, everybody. Seasonality, yeah, you mentioned that over the weekend. We'll see. Maybe that got pushed forward into Tuesday, but you know what? We're going to keep an open mind. We're hearing that seasonality second week of October is usually a down week. I respect it. I respect seasonality, so I'll keep an open mind. But I think that the news flow, the bad news has already been released, and in probability, we may see a rally into the back half of the week. So I'll keep an open mind, though. I clicked the bell 4 times. Hey, man, thank you very much. Appreciate it. Patrick scalped UGAZ 4 times yesterday. I'll take a look at UGAZ for you, pal. You got it, Pat. All right, so we're seeing a move higher here. This is a 15-minute chart, way too volatile for our taste. We are not day traders here. And you can see that on the 4-hour chart, we're seeing a bit of resistance at the 20-period moving average, which is flattening out. That's a good thing. So let's move on to, and you're using seasonality off of stockcharts.com, right? And I use them for that as well. I believe you said that on Sunday evening, right? Let's take a look at the NASDAQ. Let's see what's going on there. Wow, they're ripping. We're up over 1% now on the NASDAQ. And this chart is important because what we're seeing here, you're right. It's exactly right. And I think that bad news is out right now. And we had stealth good news yesterday, yet the market, yes, you are correct. When the market is full of good news, because what you're doing is, we don't want to necessarily go. I'll go back to the NASDAQ in a moment and the support level, but I want to address the question that's in the chat box. So the question is, when the market is full of good news, we go short. Correct. Yes, but, okay, there's a caveat here. What I want to see is, okay, a lot of good news. What I also like to hear is when my brother-in-law comes over and he's talking about the market and how much he's making on his 401k, and I look and I go, okay, that's a problem, all right, because now it's mainstream. So you have the news, then you have it validated by your brother-in-law, who is not a trader. He's an electrician for the railroad, right, and he works nights. So he makes a lot of money, okay, a lot of money. So I'm not knocking the guy. So the point is, it's not his business, right? But also what I want to do is I want to take those bits of information, I want to validate it against the charts, not daily charts, but weekly and monthly charts to see whether or not we're topping out, right? Are we at resistance levels? Or if we are at all-time highs, are we seeing topping action on the candlesticks? Are we extended on the Stokes? Are we seeing the advanced decline line move against the overall market? Meaning, do we have too few stocks pushing the overall market higher? Meaning Google, Netflix, Amazon. Are they pushing the stock market higher, yet everything else is rolling over? Those are the internals that we look at in addition to sentiment. So yes, your comments are accurate in that we go looking to short the market based upon overly optimistic sentiment, bullish sentiment, and then we'll look at the technicals. Let's get back to the charts for a moment. Yeah, I will. I'll ask him to send out a newsletter about when he wants to get long with stocks. And I could do that. He's a good guy too. VIX is retest again. Second retest is a great buying opportunity. VIX is threatening to break out here. I questioned last night on Market Wrap whether or not it was going to do so. I drew a upper band of resistance on the VIX. If we break out and above it, I'm looking for a retest of that breakout point. We haven't broken out above the declining 45-degree upper band of resistance. If we break out above it, then I get very concerned about the downside risk to this market. So the VIX closed out the day extremely bullish yesterday. I questioned the veracity of that move because I thought that traders had it wrong. It appears I'm being made right this morning. That doesn't mean that by the close, I will be made right. I may just have egg on my face. That's why I need to keep an open mind here. So at current, the NASDAQ is flirting with the upper band of resistance, which acted as the prior lower band of support. If we rally up and through this support level here, okay, that's good stuff. But what really matters is a rally up and through this line here in green. If we close up and above it, in all probability, we are going to challenge the prior high. Once we begin to take out these prior highs, you really need to start thinking about covering shorts if you haven't already done so, and or look to get long of this market. It's 5:20 in the a.m. We're getting a little bit long here. I'm going to come back to the futures in a moment. I want to go through some news headlines from ZeroHedge.com and CNBC. And I didn't plan on spending all that much time on the futures. I just wanted to do a cursory overview. So yesterday, here's the news off of Zero Hedge. Stock and bond yields rise modestly after Powell unveils not QE. And that's what it is. They don't name it. They're not going to call it QE. Don't expect that. Because if they call it QE, that means that the prior QEs failed because now they have to go back to it. It didn't work. They'll probably call it nothing. They'll probably call it repo, try to do it silently behind the scenes. Don't get a lot of news. I'm not going to be the least bit surprised. Think about it. He didn't even admit yesterday that they have been already back in the market for the past 2 weeks, expanding their balance sheet. Think about that. That's pretty nefarious stuff. So, and I laughed at this. Anyone who calls QE4 and not QE is a Russian spy. Yeah, you have to love that. So, this, as the Chinese say, we live in interesting times. So the markets ignored this yesterday and focused on not the reason why as to why he announced QE. One of the reasons anyway, rail recession. Carloads tumbled to 3-year lows amid manufacturing implosion. I don't make this up. The government's data is telling us this. They are now responding to it. This is a manufacturing recession. You're seeing weakness in the services sector. They're not in recession yet. The numbers at least aren't, at least on the PMI, are not reflecting a recession in services, but certainly in manufacturing. Then when you take a look at CNBC, and here is the mainstream media, as is typical. Here is the mainstream media citing Max Baucus. And I'm going to talk to you about Max Baucus. He's a senator turned ambassador under the Trump administration. He's going to dictate to the president how you should negotiate. This guy here. You don't do these things prior to negotiations, meaning after the Chinese slapped us in the face on Sunday night and said, we're not conceding to you, we'll come to the United States, but we're not going to give you a darn thing. President Trump stands up and says, okay, you know what? Before these negotiations, I'm going to let you know a couple of things. A, we're probably going to blacklist some of your companies. B, we're probably going to slap tariffs or visa restrictions on some of your negotiators in advance of the trade talks. Now, to Max Baucus, that's an offense. How dare you be rude to the Chinese who've been slapping us around for the past 20 years? How dare you be rude in advance of negotiations, which are ever so critical to our future? Max Baucus, this guy here, and CNBC loves to publish the apologists for the Obama and Bush administrations. Max Baucus, this is Max Baucus's claim to fame. This is from 2009. This is published from The Atlantic, and no friend to a conservative. Max Baucus, a Democrat. The former lead player on healthcare reform recommended his girlfriend for a U.S. attorney job. Did he do anything illegal? I don't know, and I'm not making that allegation. Does it pass a sniff test? Not with me. Yet, he got promoted to U.S. ambassador from in the Obama administration, and now, years later, the U.S. ambassador to China, no less. Look at where we're at right now. Now he's dictating to us through CNBC, the mainstream media, how we should talk to the Chinese. You don't get much worse than this. If you agree with me, give me a like on this, because I am physically ill from hearing from these bureaucrats. I move on. I digress. Sorry, I get passionate about this stuff. Let's see what we got here. I know we want to go over BHP, Trent. We got it. We'll go over that. And we have UGAZ. Let's slip over to TrendSpider. I think I already have an alert set up here. Maybe it expired for UGAZ. No, it's still here. All right, so we'll go over. Oh, by the way, I will be on with TrendSpider tomorrow on a webinar. I'll put a link to it in the description area tomorrow morning when I do Swing Trading Today live. I don't have it in front of me, but I'll be 6 p.m. tomorrow night, Eastern Standard Time. They've invited me back. I think I am the most frequently invited back guest on their webinars, and I have a good time there. It's a great group of people. Please join me tomorrow night on TrendSpider. If you want to join in with their product as I demonstrate it, how I use it, just use the link below. Check out, get a 25% discount, CT25Z. Again, CT25Z is your discount code. So UGAZ. All right. So this is my manually drawn line here. And we had managed to rally off of this alert I have set. And on the right here, we closed above this resistance level. And we failed to hold it 2 days later. Good to hear. You getting value out of it? Good stuff. I'm getting great feedback about it too. What value do you get most out of it? Are you using the alerts, the automated technical analysis? What value are you getting out of TrendSpider the most? That really helps me out. So UGAZ, we failed to hold this breakout point here, but we did hold this support level, which I drew manually. Why is it, I'm getting a glitch here this morning. Okay, so we failed to hold support. I'm looking for a higher low here, and I'm going to go to a 4-hour chart in a moment. I'm looking for higher lows on RSI and Stokes. I'm looking for a rollover here and a higher low. And this is pretty much consistent from a daily basis on all the indicators. I'm looking for a higher low on Stokes because at current, whether it be the alerts, and trends, good stuff. I'm glad you're getting value out of it. The stochastics across the board, whether it be transports, S&P 500, Russell 2000, natural gas, whatever, they're beginning to roll over. We're looking for a hook up and a higher low on Stokes because we've had a fairly serious correction here on the market and with UGAZ. So would I be a buyer at current? No. What I would do on a daily basis is take my crayon out. I'd see whether or not we hold this support level. If we fail, I would really avoid like the plague. Let's go to a 4-hour chart. All right, so a 4-hour chart, very similar to that of the daily chart. We have a higher low being put in on RSI, but what we don't have yet is a breakout. Stokes, possible higher low here. We're looking for a hook up. So I wouldn't be a buyer of the UGAZ until such time as we close above. I don't even care about this resistance level here anymore. Let's call it the 1490 level. I really care about this level here, 1594, because I'm tired of this meat grinder of a sell-off. You get a bullish reversal bar, then you roll over. It's a meat grinder. I want to see higher highs after I see higher lows. And if you haven't given a like so far, can you give me a like, please? I'd appreciate it. Thank you very much. It helps me with the YouTube algos. I want to see it close above 1594. Why? It's because it marks the prior high here. It marks a prior high here. I want to see it close above that resistance. Right? Does that make sense? And what I'll do is I'll set an alert when we break through. I want to know really quick four-hour breakout. And folks, if we get this alert that's triggered at 9:45 in the AM, I don't care. I'm not buying it. If we get it at 2 p.m., I don't care. I'm not buying it. If we get it at 2 p.m., I'll look to buy it if we're still holding at 3:30 p.m. or very close to the close. I want to make sure I'm not getting suckered into a head fake and we see a sell-off into the close. So the closer you buy into the close, the more probable. This is especially true for those that are trading with an account below $25,000. How many times do you enter a trade, you chase the market in the morning, then it reverses against you, you stop out, and all of a sudden you get a day trading call from your broker because you broke the FINRA rules. What helps you avoid getting those FINRA, what do you call them? I used to get them as a kid. Abuse, I don't know what alerts they call it anymore because I don't get them anymore. But you get an alert that you broke FINRA rules because your account is under $25,000. You either get a restriction or you get a deposit funds in because you get a day trading alert or whatever they call it. If somebody knows that, can you please pop it in, what that's called? And you may get this restriction against your account. The closer you buy those shares versus the close on the day, the less probable you are of getting a FINRA restriction because you had a day trade call because you get stopped out of that position. And I'm not that articulate on that. If I need clarification, please let me know. I'll be more than happy to clarify. I just jumbled up that description of why I buy in the final hour. And this is the fun of being live. You can't edit this, folks. So breakout. So possible long into the close. As always, into the close. That's what we care about. Think about yesterday. Had you bought at the 2 p.m. hour, yesterday, all right, our alert is set. If you bought at the 2 p.m. hour yesterday, you would have been sucker punched into the close, right? And you might have gotten stopped out of your position. And now this morning, you're waking up and the markets are rallying. And think about the psychology, what that does to you. You bought on what you thought was a positive headline news event, which it was, yet negative news came out later in the day, driving the market lower. You get stopped out. You wake up this morning and the futures are up 1%. Think about what that does to your psychology. You need to get out of that meat grinder, right? To gain consistent profitability, you need to change your behaviors. What works against you? And one of my guarantee is if you're not opening your positions into the close. I digress. This has gone way too long. I'm sorry. We had another one up here. It was BHP. And we'll probably leave off with this unless there's somebody else out there with a request. It's 5:35 in the AM. P, not B. Okay, let's go to... I'm surprised that BHP is not doing better here. And I think the last time I went over this chart, I cited the underperformance of BHP as being their exposure to copper. And I think one of the viewers said that, yeah, they have a very heavy business towards copper, because I expected that BHP would rally due to their gold mining business and the silver mining business, but copper has not been doing well because of the slowdown globally, and it appears as though it's weighing on BHP. So to the technicals. Daily basis. Let's throw up some trend lines here first. You know, initially, and this is the value of TrendSpider, initially I was going to say, and this is just gut, right? And all too often we trade with our gut. It looks as though we're putting in a higher low, and we still may be. But when you add your overlay, you could see that we had recaptured support, then we gave it up. And we closed at the lows of the day yesterday. So what I want to do here, I want to take my daily overlay off, but I want to stay on a weekly chart. Okay, good. So these dashed lines now are weekly support and resistance levels on a daily chart. This is multi-time frame analysis. And you can see here, MFTA, that's what they focus on. That's what attracted me to TrendSpider. Anyway, so there are two ways I would look to get long of BHP Billiton. One, we pull back on a weekly basis to this lower band of support, and it holds. Two, we take off the weekly overlay, we go to the daily overlay, and we recapture this daily resistance level, which is at current. Let's give ourselves some room. Let's go with the 48.40 level. If you get a close above 48.40, that would be a bullish signal for BHP, but I would caution, be careful of that copper price business, because if their business is overly weighted towards copper relative to gold and silver, that gold and silver business may not be enough for them to move higher if copper is weighing on their business. Now, if they shut down copper production, then it becomes more interesting because they're cutting expenses, and if they're increasing their gold and silver production, then these shares become more attractive. So I would watch out for their business model and how they're shaping it for demand. And watch, of course, the charts. GE. Okay, Pat, you got it, brother. GE. We haven't taken a look at GE. I think they froze their pension benefits. Pat, can you confirm that? Do you know if they froze their pension benefits? I think I read that on a headline yesterday. All right, so daily chart, we'll come back to this one. I want to throw up the weekly chart. All right, so we have broken through several support levels. And we're trying to hold, let's call it the 829 level on GE. So on a weekly basis, this is still a basket case. We have RSI. Pat, yeah, you confirming? Yeah, they did. Okay, yeah. So they that could put them in trouble with RL. I'll get to DocU. Okay, that could put them in trouble with the federal government. I don't know how much the federal government is going to lean on them because of bankruptcy concerns, ongoing concerns. They don't want these layoffs in the news, so I doubt you're going to get much of a response out of the federal government on GE's events. They probably had the blessing in advance to do that. So GE is holding support at current, and even if you throw up the daily overlays, we're holding support. If we break out or break down below this lower band of support, we're going a lot lower here. And the shares would then become a short. Now, if we recapture and close back above 859 to 860 per share, then they become a little bit more attractive. I think that there's way too much headline risk here. I don't like this chart. I don't like the company. I think that it's been gutted. I would avoid it. When you have a company that's freezing pension benefits, that's bad stuff. That's really bad stuff. So, me personally, I would avoid these shares. If you're dead set on buying them, you could buy today as long as we hold support here, but to put a stop loss right below this lower band support. What was the low of the day yesterday? $8.27. Put your stop loss just below that level, because if we break, we're coming down here. And that's a big, big drop on a percentage basis. Let's take a look at a 4-hour chart. Yeah, we closed right at the lows yesterday, and we closed down below support. I would avoid. I would have to say avoid GE. There's nothing good here. Weak stocks tend to get weaker. And I frankly think that longer term, we have ongoing concern issues. Docu. Now, here's a tale of two charts, right? We have GE breaking down, weak stock getting weaker, and Docu, which is a strong stock, and it appears to be getting stronger. Now, we don't have a lot of history here. We did break out yesterday. Actually, no. We didn't have a closing breakout yesterday on a weekly basis. But we are very, very close to a breakout on a weekly basis. All right, so our alert is set here. I like the setup. We'll do a deep dive on this a little bit further. We did see some topping action yesterday. We'll go to a daily chart in a moment, but we were in a trading range. We broke out. We have support here at the 60.37 level. Let's call it $60 per share. If we break down below that support level, you'd want to get out. That's where I would set a stop. Daily chart. We're flirting with a breakout here. We have daily resistance levels above in both green and red. Those are my developers from Ukraine. A daily breakout above this resistance level here in red. That would be sexy stuff, especially if you get a pullback and a retest and we hold that breakout. That would be really sexy stuff. So Docu is looking very, very good. I think the path of least resistance has been up and is up. We'll probably move higher here. 4-hour chart. On a 4-hour basis, we have very, very tight Bollinger Bands. The upper band is expanding upward now. That's bullish. I think we're breaking out here on DOCU. Anything to prevent FOMO is a very, very good behavior. A very, very good behavior. That is probably the worst types of trading behaviors there is. So good call there. Whatever works for you. or make a commitment to yourself. You can keep your watch list, but don't touch it until 3 p.m. Eastern Standard Time, and then scroll through it until that 3 o'clock hour. All you need to do, go to your day job, use this. Nothing better than having Apple, if you have an iPhone, there's their quote feed. Outstanding. Real time, great stuff. Use it all the time. Stay away from your computer. We're not day traders here. If you're a swing trader, and my surveys are telling me this, thank you for filling out those surveys. If you're watching this, in all probability, you are either a swing trader, B, you're either A, a swing trader, B, a position trader, or C, an investor for the long term. So really, stay away from your computer, go to your day job, do that, and revisit the market for 2 minutes at the end of the day, scroll through your watch list, and then decide if you want to pull the trigger. Are you closing above resistance levels? Are you seeing good volume? Are you seeing the close near the highs of the day? Those are the factors that you should be looking at. Set your goals, adhere to them. Don't hope when you should fear. And I'm getting long-winded here. I could do this all day long, and I'm putting this all in a course, and we'll get it all in a course at some important time in the future. Members, I'll put it out there free for you when I complete it. It's 6:46 in the a.m. Let's scroll back around to the futures. Let's see how we are closing it out. The dollar, since we last spoke about the futures, they are now catching a bid. Will it hold? We'll see. I doubt it. The price of oil. Oil. Interesting. Oil is catching a bid here. Even after we announced the pullout out of Syria. Now that is good stuff. Because if we're ratcheting down tensions over in the Middle East, yet you have the price of oil moving up higher, that is bullish. Now, the energy sector is taking it on the chin. We went over the chart of the energy sector yesterday on Market Wrap with members. We'll talk more about that tonight as well, because if oil is breaking out, that means energy should break out. So we'll talk tonight about how energy closed out the day. If, in fact, oil closes out the day higher, is it time to go buying energy stocks? We'll talk about that tonight. S&P futures. All right, so we had that huge rally, and we were looking at the 15-minute chart earlier, and I said that we were going to get a pullback. We've gotten that pullback. I think that we got a little bit extended on a very short-term basis, meaning the 15-minute chart, and we are now trading still above the third standard deviation Bollinger Band in red. So I expect to see probably more of a pullback to a sideways bias, allowing the shares to consolidate. And then I'm predicting that we do move higher. We're still up nearly 1% on the session. The Russell futures, will probably be looking to get long of the Russell through 2000 today using the TNA, which is a leveraged ETF, putting you long of the Russell 2000. If you don't want to use leveraged ETFs, simply buy the IWM. The charts are exactly the same. Volume would be different, but the chart pattern is exactly the same. Less volatility, though, buying the IWM. So if you're getting any value out of this video, folks, or these commentaries, please subscribe, click that bell button, get notified, and click that like button. It helps me out with the YouTube algorithms. And if you want me to go over any symbols tomorrow morning, if you made it this far into the video, please leave a symbol for me to review in the comments section below, especially if you're watching this on the replay. Leave a comment below of the symbol you want me to go over tomorrow morning, because you earned it because you stayed this far into the video. Yeah, I think that the comment on China, I think that what we saw yesterday out of the mainstream media, and even on Zero Hedge, which is not mainstream, was that they reported as being horrific behavior on the part of a president. He was simply doing his job, right? God forbid he play hardball with the Chinese. So EMPH, I'll go over that tomorrow morning, RL, if that's okay. That's a symbol, right? I think that's a biotech, no? If memory serves me, EnviroPharma, something like that. Because I'm running late here. Let's go to the NASDAQ, how we're closing out. Yeah, we're getting bearish reversal bars. We need to see a close above this resistance level here at 76.96 on the NASDAQ E-minis, and ideally above here at 77.30 later on in the week. Patrick, yep, agreed. Everybody have a great day here. I'm going to wrap up with gold. If I could find it, what did I do with it? Here it is. Gold's pulling back. Wow. And this is what I said earlier. All right, we saw topping action here. I drew this upper band of resistance, and I mentioned earlier, this is the first chart. The dollar was the first chart I looked at. Then I looked at gold. I saw the topping action. Then I said, I didn't even look at the S&P futures. I said, I got to check the S&P futures. They're probably rallying. And sure enough, we're pulling back on gold because they trend to trade inversely because now we have a risk-on environment. People want to buy stocks, and they're going to look to take stocks higher. You'll probably see a little bit of pressure on gold. Longer term, I think that they're breaking out anyway. Gold is breaking out anyway because you're going to have inflation on the horizon. So gold is pulling back. Look for it to hold the support level. And I will leave a support level to buy NUGT in the forum. I'm going to drop that in there in about 5 minutes. So I'm going to take the new price action into account on gold. NUGT is pulling back off of yesterday's close this morning in the pre-market. We left the day a little bit overbought. It was a great day. We're going to get a pullback here, as mentioned last night on Market Wrap. So I'll leave a comment in the forum. Everybody have a very, very profitable trading day. Thanks for joining. Don't forget, if you could please take that survey if you haven't already done so. It's very brief. I don't want any personal information. I wouldn't be the least bit surprised to see a bull flag out. Not the least bit surprised. We had the Federal Reserve at the back of gold. They lit the fuse yesterday formally. And with that, everybody have a profitable trading day. Be well. Thanks for joining. Talk to you tomorrow.